Hello and welcome to FlightGlobal Focus, your essential podcast for trusted aviation insight. Thanks for joining us today. I'm Alfred Chua, the Asia Airlines editor from FlightGlobal. And this week, we've got quite a bit to cover, from airline acquisition to consolidation activity, and of course, to the upcoming earnings season. Now, joining me today to discuss these topics are my colleagues, FlightGlobal's Europe Airlines reporter Kerry Reals and contributing airlines editor Graham Dunn. Hi, Kerry and Graham.
Hi, Alfred.
Hi, Alfred.
Please note, this episode of FlightGlobal Focus was recorded before US investment firm Apollo Management proposed a counteroffer for UK carrier EasyJet that trumped an earlier proposal put forward by Castlelake, which we discuss in today's podcast. Now, since EasyJet signalled on 5th of July that it would recommend a takeover offer to shareholders based on a proposal from Castlelake to pay £6.90 per share to acquire the airline, Apollo has swooped in on 10th of July with a surprise counteroffer proposal of £7.15 per share, which EasyJet has now said it's inclined to recommend to shareholders. So this very much puts the ball back in Castlelake's court, and the market is now waiting to see if it will continue the bidding war and propose a higher offer. And there seems to be a feeling among analysts that there could be a greater chance of EasyJet continuing with its growth plan if it were to be acquired by Apollo rather than Castlelake, with some having expressed the view that under Castlelake, the carrier could be more likely to be broken up and sold off. This is a very fast-moving story, so be sure to subscribe to FlightGlobal.com to stay up to date with all the latest developments as they happen.
Let's kick things off looking at one of Europe's biggest low-cost operators. Now, after weeks of offers, counter-offers, and rejections, EasyJet looks set to finally accept a proposed acquisition bid by US investment firm Castlelake. Now, Kerry, could you fill us in on what's been going on there?
Sure. It's been a bit of a soap opera over the last few weeks after it emerged at the end of May that Castlelake, the US investment firm, was exploring a possible offer for EasyJet, UK low-cost carrier. EasyJet initially described it as a highly opportunistic offer. Over the next few weeks, Castlelake put forward several more proposed offers, each of which was rejected by EasyJet's board. And then over the weekend on the 5th of July, EasyJet said it would be prepared to recommend a fifth proposed offer that came through from Castlelake, and that was for £6.90 per share. And they said they'd be prepared to recommend that to their shareholders should it eventually turn into a firm offer. So where things stand at the moment, Castlelake has until the 3rd of August to either make a firm offer for EasyJet or walk away. So put up or shut up, I guess, if you will. Just a few points to make on that. Castlelake's latest offer values EasyJet at just over £5 billion. EasyJet's shares soared when markets opened after the latest proposal was announced. But notably, the share price did not hit the £6.90 that Castlelake had offered. So a few things to consider. There's some ownership and control issues to consider. Obviously, Castlelake is a US investment firm. And although EasyJet's a UK carrier, it had to open an EU-based subsidiary to continue to access the intra-Europe market. So part of its operation is subject to those EU ownership rules. Castlelake appears to have found a way around that, but they've named two EU nationals, quite a well-known names in the airline industry, former EasyJet Chief Operating Officer Peter Bellew and Mark Breen, who's been involved with airlines in the Middle East, such as Flyadeal. So they've been named as possible investors. And then another factor to consider is that 15% of EasyJet is held by Easy Group, which is associated with its founder, Stelios, who's been uncharacteristically quiet throughout all of this, I would say.
Yes, so Stelios has historically been quite a noisy shareholder. Obviously, the founder of EasyJet back in the day and over the years has not been shy about giving an opinion on the development of EasyJet going forward. He was very critical of the speed of their capacity growth in the past. And EasyJet has always been management has always been pretty mindful of keeping Stelios I guess, happy or quiet. And he has been relatively quiet over recent years. I think that is one of the big unknowns in this, is to what extent no one quite yet knows what Stelios thinks of this.
Right, right. I think it's also interesting to ask as well, why did it take the airline so long to warm up to the proposed offer?
So I think EasyJet's board felt like Castle Lake's initial proposals undervalued the carrier. They described them as opportunistic. We have to remember, obviously, airlines have been through a rough time of late with the massive increase in their fuel bills after the Iran war started in late February, although that does seem to be easing now. So it was maybe an opportunistic time for them to make this offer. So the board was clearly holding out for them to offer more money. Perhaps they thought that something closer to £7 a share would be more palatable to shareholders. Maybe that's why they waited for it to go up to £6.90.
And I think one of the interesting things about this story, especially approaching it as kind of industry trade journalists, this is a sort of a financial story in many ways. EasyJet has been subject to kind of persistent speculation for several years, and, rejected an offer or an approach 4 or 5 years ago, which was never publicly disclosed, but a lot of suggestions that reports that might come from Wizz Air. And it's always been, I guess, seen as potentially vulnerable to a possible offer. You obviously are also seeing wider elements, which, maybe UK stocks generally are seen as possibly good options for US investors potentially to make offers for, or potential gains there. I think you see this is, to some extent we view it as, EasyJet has their airline strategy and how the airline will develop. But actually you see that this is, a financial story, a share price story in terms of how the stock is performing. And, it's been below its pre-pandemic levels since it hasn't recovered to that level. And I think that added more reason for why Castle Lake would be looking at it and why EasyJet management might be considering accepting an offer.
And, the natural question then, of course, is what's next for EasyJet? Should it accept the offer? What's likely to happen? Or should it reject what's likely to happen?
Well, that's the $1 million question, isn't it, Alfred? And there appear to be two schools of thought emerging on that. So as reported by FlightGlobal earlier this week, analysts at Bernstein think it's likely that if Castle Lake does end up acquiring EasyJet, that they will break up its assets. It's got some pretty valuable assets, including its large owned fleet of Airbus A320neo family jets, a significant order book for more of the type, valuable airport slots at some congested airports throughout Europe, and then also its holidays business, which is pretty successful. So Bernstein seems to think it's going to break all of this up, sell it off separately, perhaps to some of the big European airline groups. In the report that they put out earlier this week, they pointed to Castle Lake's history in aircraft leasing. They used to own a leasing business called Castle Lake Aviation, which was sold a year or so ago to Avalon. They also have a new lending platform, which provides debt capital for new and used aircraft. So having access to that huge fleet and that large order book is probably a pretty attractive option to them. And then they don't really have a history of investing long-term in airlines. They did take a stake in SAS when it was restructuring, but that's in the process of being sold to Air France KLM. For its part, Castle Lake has said that it intends to support EasyJet. It intends to support EasyJet's future growth and transformation. So on paper, it's not planning to do what Bernstein thinks it's planning to do. Those analysts are not buying this. They've kind of doubled down this morning, actually, a report that I saw they put out to justify the acquisition price that they're potentially offering. Bernstein is saying they would need a return on investment of 10% by 2030, which would mean doubling the margin. And as we all know, margins are pretty razor thin in the airline industry. At the other end of the scale, you've got other analysts, for instance, at Barclays, that seem to buy what Castle Lake is saying. Barclays, for instance, has said they do not expect a radical change in the business plan of EasyJet, and they expect Castle Lake to grow the airline once it's been taken private and continue to develop the holiday business. So it's really a big question mark what will happen to it even if it eventually gets acquired. I mean, there's a massive hurdle to get over with shareholders. There's no guarantee at all that shareholders would accept a firm offer if one was even made. So, yeah, lots of questions to mull over the coming weeks.
And I think with EasyJet, obviously it has sort of struggled a little bit to really lift its earnings. They set a midterm target of reaching, I think, long-term earnings of $1 billion plus. And that, they had several levers they were hoping to do that with, one of which was, as Kerry mentions, is that growing holidays business, which I think has been quite a successful plank for them. Another was around cutting its winter losses, which have proved harder, and certainly much harder this last winter, though obviously there are factors which have complicated that. And also it's hoping to gain efficiencies from its fleet renewal, which obviously involved, in this instance, it was kind of replacing some of its smaller, older aircraft with larger, newer, more efficient Airbus narrowbodies, A321neos, which would enable it, they have said, to really benefit from at those capacity constrained airports. It means they can add capacity where slots aren't really, not being dependent on slots. So there's lots of kind of opportunities there going forward. But, I think, and this to some extent applies to the timing of everything, obviously with the fuel price crisis and the supply chain issues that have been an issue, it's been harder for EasyJet to unlock some of those gains that it saw coming.
Yeah, I would agree. And I think that they haven't been as successful at coming back after the pandemic as, for example, Ryanair, the big competitor here in Europe. And also, I think that if they did end up being kind of broken up, then that could end up really benefiting people like Ryanair and Wizz Air, and also Jet2 in the UK, which is actually announcing its financial results today. So it will have an impact on European capacity, whatever happens. And I guess they're all kind of waiting with bated breath to see what ends up happening.
And worth saying that Michael O'Leary has over the many years, he's always suggested there'll only be 4 or 5 major players left in Europe, which he obviously considers himself the 3 big network carriers. And sometimes EasyJet was included in it and sometimes not. And I think his more recent theory was that it would get broken up. So who knows?
Lots to look up for in the coming weeks. If we move beyond EasyJet, Graham, could you, share what the appetite for acquisition or consolidation is within Europe? I know we talked a little bit earlier about breaking apart EasyJet and parts of it will go to some of the other LCCs in Europe. And we also know that there are a few other carriers in Europe that are targets for consolidation. What's the kind of appetite like for acquisition and consolidation?
Yeah, I think it differs across carriers and their experiences, but you're certainly seeing lots of things in play at the moment and over the last year or so. So obviously SAS was a big development with Air France KLM taking a stake in that and looking to take full control. Ironically, they worked with Castlelake on that one. And ITA was obviously the big move as well, which, again, all 3 network carriers showed an interest in that up to a point. Lufthansa eventually took control of them. You've definitely seen interest. And, of course, we're saying IAG, the British Airways and Iberia parent, had 2 goes at acquiring Air Europa. Now, that was a bit of a struggle in terms of getting the regulatory approval from that because of the potential competition concerns and the slots that might be needed to be given up. And I think maybe you see that in the approach for another carrier that's on the market now and is slated for privatisation in TAP Portugal, where Kerry, I think we've got a couple of carriers in the mix there.
Yeah, so IAG actually pulled out of their interest. So it seems to be a 2-horse race currently between Air France, KLM and Lufthansa Group. There's a deadline at the end of this month for binding offers to be submitted to acquire a 44.9% stake in TAP. Both Air France, KLM and Lufthansa have submitted non-binding offers so far and are expected to submit their full offers later this month. And then we've seen evidence of competition between those 2 heating up in recent weeks. Lufthansa recently announced that they'd started construction on a new MRO facility in Portugal, and they took the opportunity when they announced that to re-emphasised their strong interest in TAP Air Portugal, saying that Portugal is a very important country strategically to Lufthansa. And then just before that, we saw Air France-KLM signing a €1 billion credit facility, which they said would be partly used to fund M&A activity later this year. They didn't specify, obviously, what kind of M&A activity, and they are in the process, as Graham said, of increasing their stake in SAS. So there is quite a lot going on the consolidation front, and I guess we'll see how it all plays out. But there's definitely an appetite for it from the big network airline groups in Europe.
And it would be interesting to see, of course, whether any of them, with Castlelake making a move for EasyJet, whether it sort of tempted anyone else into that. I mean, certainly in terms of if they were to break up EasyJet in any way, if new owners were to do that, certainly there's bits of the business that would be appealing to all three of those network carriers.
Absolutely. And there were actually some rumours. I think it was a Bloomberg report which suggested that the chief executive of Air France-KLM had said that they would perhaps be interested in participating in the Castlelake bid for EasyJet. When I met with KLM's chief executive in Rio last month, I asked her about that and she didn't want to comment, but maybe there's some interest there, who knows.
And there's other bits and pieces around the fringes. Turkish Airlines, they are in the process of taking a minority stake in Air Europa. Aegean Airlines has got a small stake in Volotea, which is partly related to helping to refinance that company, but also around potential partnerships and combinations there. And then I think probably the other unknown is what consolidation opportunities might come up should this prove to be a difficult winter for airlines in Europe and some of those smaller carriers, particularly those who maybe aren't hedged or don't have the finances in place, and whether that will create more opportunities for consolidation, either through acquisition or what probably happens more regularly, which is airlines having to cut the scale of their operations, reduce their operations, and create opportunities for other carriers to move in.
And, that's probably coming up in a few months' time, but all of these developments that we're talking about now, it's also coming as the airlines are preparing to report their earnings for the April to June quarter. And, when you're listening to this podcast now, we probably would have already had the financial results for Delta Airlines and, as Kerry mentioned earlier, Jet2, which has just reported its results. While the April to June period is traditionally a stronger performing one for airlines, I think this year, needless to say, has been quite different. This was the quarter that airlines were confronted with the unprecedented spike in fuel prices. And, many carriers, they were forced to cut their capacity to save on costs. Kerry and Graham, could you talk about some of the key themes that, you'll be focusing on for this earnings season?
Yeah, I think the obvious thing, as you've just mentioned, is the huge increase in fuel costs that they experienced towards the end of the first quarter and throughout the second quarter. So it's going to be interesting to see what impact that's had on airlines' results during that quarter. And as you said, some of them are hedged and some of them not so much. At one point, their fuel costs doubled, although they seem to have fallen right back now after there was signs of a peace deal between the USA and Iran. But then this morning, there's reports that fighting has started up again. So whether that's going to translate back into another increase in costs, we'll just have to wait and see. The one thing that does seem a positive for airlines is that demand has held up. And I think that's cushioned the blow significantly. Demand for air travel is still very strong. So it'll be interesting to see how optimistic airlines are feeling as they head into the second half of the year, and also to see what their capacity plans are for the second half, how disciplined they're going to be, whether they're going to continue to tread with caution, or are they going to get overconfident and add too much capacity. So I think, all of those questions, and to see kind of what outlooks they give and what kind of guidance they give, because the geopolitical picture is obviously still very uncertain. So I think it's very difficult for anyone to make any kind of concrete predictions at the moment.
It so is, and trying to fathom the oil price and the movements there. I think with the European earnings, it was strange covering the first quarter results because all the narrative was about this massive spike in fuel prices, and all the airlines were warning about the price, the extra cost attached to that, and so forth. Yet, their results actually were kind of inflated. Oil was a tailwind for them because it was actually, especially in Europe, where a lot of those carriers are hedged, they weren't actually feeling any of the pain. Now, weirdly, Kerry, you say there the oil prices, I don't think anyone expects that to be a smooth ride necessarily over the coming months, but the narrative is better. With fuel prices the oil price has come down, fuel costs should have gone down, but airlines in the second quarter will have taken that massive pain of that bit where the fuel price is at its highest. So it will be a bit of a strange reporting season because I think the figures might be quite bad. The hit will be quite high in that second quarter from fuel costs, where airlines didn't have much time to react or take capacity out. As you said, I think the key thing is sort of going forward, how we see airlines adjust their capacity. The US carriers, Delta Airlines will report and will have reported by the time this comes out, as you say, Alfred, and US carriers will be particularly interesting because obviously they are largely not hedged. And so you'll see, that I think they acted a bit more decisively for that reason. So they've already taken a fair bit of capacity out, and actually probably they might get the rewards of that, certainly in terms of margins. I think, as you say, Kerry, the key question will be to what extent they think they've done enough on capacity. And it might well be that they have, and that actually the outlooks for the rest of the year are, relatively upbeat compared to what we were seeing 3 months ago.
Yeah, but it would be interesting to see whether that demand stays strong. I think that's what's kept them going and they've been able to pass on a lot of those, not all, but a lot of those fuel costs to passengers through higher fares and surcharges because demand is still really strong. But as we head into the Northern Hemisphere winter, the second half of the year, when demand's not as strong as it is over the summer, if the fuel price does go up again, they might not necessarily be able to pass that on as much to passengers. And then that would, I guess, lead to a more disciplined approach to capacity, which might not be a bad thing. But yeah, I think it's all very uncertain what's going to happen with fuel prices, what's going to happen with demand. So I would expect them to remain a bit cautious in their earnings presentations. What about carriers in the Asia Pacific region, Alfred? What kind of things will you be looking out for over there? And is there anything that we should really look out for in that region?
Yep. So similar, quite similar to the European and the North American carriers. Obviously, fuel is going to be quite a key theme. And, the carriers in this region were among some of the most impacted by the fuel crisis. You have airlines in Vietnam and the Philippines warning against potential fuel shortages. That probably gives you some idea of how big a hit the airlines are expecting for the fuel crisis. However, there's another interesting sort of strand that I would be looking at. And, in the early days of the conflict, I think some Asian carriers were among the early beneficiaries in that sense, because the conflict, it led to mega hubs like Doha and Dubai to be shut for days and weeks on end. And that has sort of benefited carriers in this region like Singapore Airlines, Malaysia Airlines, Cathay Pacific, and Thai Airways International. So in the previous quarter, I think they talked a lot about the spillover traffic from the Middle East that sort of benefited them. And I think one thing to look out for in the current earnings season is whether or not this is a sustained demand pattern that they're seeing, or is it just a one-off anomaly, and especially so now that the Middle Eastern carriers have more or less returned to normal operations. So those are kind of the two broad themes that I'm looking at. And if we're looking at sort of specific carriers, I think one of the airlines that I'm looking out for would probably be Air New Zealand. And this is because I think just last week or earlier this week, they sort of put out an investor presentation where they talk about this big strategy reset that they're going to be taking, in the short to midterm. And this is, of course, against expectations that they would be posting a steeper loss for the year to the 30th of June. So it's the most recent financial year. And of course, that's on the back of the fuel crisis and also its very well-known supply chain challenges. So, Air New Zealand's been impacted by aircraft on ground, both on its narrow body, which are the Pratt & Whitney powered Airbus jets, and also its Rolls-Royce Trent powered 787s. So I think at the peak, I think it's quite a significant portion of capacity that's taken out because of the aircraft, the lack of engine availability. So from what I understand, the situation is improving. So that's a kind of positive signs on that end. And Air New Zealand's strategy reset also involves quite a few key themes. One of them is focusing a lot more on international premium inbound travel. And also, it's also rethinking its network strategy, especially now that, the aircraft that were grounded are back online. They did mention that, they would be talking a bit more about this strategy, this new strategy in their earnings. And I think they're going to be releasing their earnings in late August. So that's something that I'll be keeping a very close eye on for this part of the world.
Yeah, it will be interesting to see what happened because they were kind of hit on all fronts, weren't they? And I guess they're now flying out of that. So it'll be interesting to tune in and see what they say.
And I think the other interesting thing, it's a good reminder, Alfred, it's a good point around New Zealand might be feeling a bit more upbeat about aircraft back in service. But we have to remember, it's easy to get a bit carried away when you're facing the fresh crisis, in this case, Middle East capacity and fuel prices. But there were challenges beforehand, of which the supply chain and aircraft availability was an issue, and those still remain, even as you say, many carriers are talking about those problems having eased, but maybe not. They definitely haven't gone away yet.
Yep, that's probably another key theme that would emerge. I mean, regardless of the regions, I think supply chain, I'm pretty sure that there will be questions on supply chain and expectations of when this issue would get resolved or not. So that's something to look out for in the coming earnings season. You've been listening to Flight Global Focus, which is a production of Flight Global with audio editing by Lucy Johnson. If you want to get in touch with us or for commercial opportunities related to the podcast, please email podcast@flightglobal.com. Listen, rate, review, and subscribe wherever you get your podcasts. I'm Alfred Chua for Flight Global Focus. Join us again next week for more in-depth analysis covering the latest developments in airlines, defense, and aerospace.